Oh, okay. That makes sense.
Yeah,
Maddie has to.
Yeah. Okay. Sorry.
Oh,
So good afternoon, everyone. Welcome to the USQ Law Society's Banking and Finance in the Future Question and Answer Seminar. Before we get started, I would like to acknowledge the traditional owners of this country on which we meet, the Jagera, Yugera, and Ugarapul people. I honour the elders that have lived and taught a powerful law on these lands for countless generations and whose vibrant cultures and wisdom will continue to nurture these lands long into the future. I also acknowledge the traditional owners where our attendees live and study. I proudly stand together with all First Nations people, including leaders of academic and the legal profession, to build partnerships with deep foundations in equality, respect, and justice. So on behalf of my Law Society colleagues, I'd like to introduce and thank our wonderful speakers, Dirckze and Amanda Khoo from Mills Oakley today, for coming today and for their generosity with their time and their expertise that they're going to share with us. And so just so that everyone is aware, the recording, today's session will be recorded through Zoom. So yeah, I'll pass it on to Amanda and Chris to get started.
Yes. All right, Jason, how are we? I guess we can see you online. Are we audible?
Yeah, you guys are really clear. I can hear everyone that speaks.
We are clear. Yep. All right, fantastic. Well, thanks everyone for attending, and thank you, Maddie, for the welcome to country. I'm Dirckze. I head up the Banking and Finance and Project Finance team at Mills Oakley in the Brisbane office. And sitting next to me is Amanda Khoo of the team. Amanda's joined recently, I guess not recently anymore, about a year and a half now. But I've essentially been the head of group for about 3 years within Brisbane office. And I might give you a little bit of my background as well, just to put a little bit of context to where I've come from and come into eventually banking and finance. So I'm actually a Sydney boy infiltrating the Queensland market. I started off at Macquarie University doing law there as arts law and a Bachelor of Laws. Moved into Clayton Utes within graduates and stayed 6 years within Clayton Utes Sydney office, looking at securitisation, general banking and finance, and property and development finance. I moved into Multiplex for about a year. That was one of my main clients in Sydney, and obviously they're one of the national and larger constructors that we have in Australia. Then I changed my iteration and went off to London for about 4 years and worked over there at what's now known as Herbert Smith Freehills globally, as well as Kingwood Mallesons globally as well. Then coming back, I worked at Gatens for a little bit in Sydney office in the banking and finance team, and then with Commonwealth Bank for 7 years. And within my time there, I spent a lot of time in credit risk and loan markets and syndications, and then moving with the family into Brisbane and heading back into the law. So coming from a banking side of things back into private practice, which is where I kind of find myself now, and come across Amanda in market at a previous firm, and hope that she joined, and she did last year. And obviously having Maddie as well in the team. We're a small practice of about 6 lawyers, which is quite sizable for the Brisbane practice. And yeah, we essentially work within banking and finance and project finance. And that's kind of the topic of what we are here today to present of, I guess, back in my old days, which is 20 years ago, the turn of the century and the noughties, what banking and finance looked like then coming out of the 90s into the new century, as well as what Amanda will present as well, neo-banking, and where fintechs and regtech is essentially taking the industry and the markets, as well as people like yourselves who are part of the greater retail side of banking, obviously with different products like mortgages, car leasing, and simple deposit products and credit cards. So in a large shape and form, you form part of a very important, certainly important for the banks segment of the market in terms of the retail land. So that's kind of a little bit of my background, but I'll hand over to a manager to give her a bit of time.
Thanks, Chris. So a little bit about me. I'm originally Malaysian, but you can hear from my accent that I sound a little bit different. My family moved to the States when I was in high school, and I completed my schooling there. And I came over here and did university. My background is a mixture of tech and banking and finance law. So I've had experience working with Google, Facebook, doing design thinking workshops on that front. And that, I guess, passion for technology was brought about because I lived in Silicon Valley for quite a while. Came over to Brisbane, finished my degree at UQ. I did a brief stint at Freehills as well, like Chris. I did a little bit at Allen's, and then started working at another firm with Chris. And then I went in-house for a bit and worked in a fintech called CanStar. So I was their legal counsel, was across, I guess, that transition, from a more traditional business into something that is digitalized, innovation focused, but at the same time, still in a very regulated industry, because they had an AFSL, so that's an Australian Financial Services license, an Australian credit license. It still involves a lot of banking and financial services. Moved back out to join Chris, and now I'm essentially, I guess, leading the charge in our movement towards working more with neobanks and fintechs. Of course, we still do the transactional type work that you'll see over there. But I think sorry, oh my gosh, Siri just, anyway, I think the move towards the future is something that is more technology focused. Banks are noticing this. You'll see from all the recent acquisitions of neobanks, the big banks want to be a part of the future. So yeah, that's a little bit about me. And Chris, do you want to take over in terms of what we do?
Yeah, so certainly my world and the world that still presents us is, traditional banking and finance. As Amanda said, and Amanda's quite an integral part in the team in terms of digital law and fintechs, and where I think a lot of you as students will one day come into or are into now anyway. So back in my day, it was quite simply transactional work between banks and borrowers. There was a lot of different types of products, as the bankers would like to say, on insurance, on credit cards, on mortgages, as I've said before. But really where we delve into within law firms and probably within our experience coming out of top tier now into the mid tiers, like Mills Oakley, it's a lot of transactional corporate or institutional type of work. And within that framework, it's basically broken down into 7 or 8 different areas of real estate finance, securitization, project finance, equipment finance, asset finance. So essentially any type of asset or category or classes of, if you want to borrow or lend against some type of asset class, you're able to do so. And really the practice of Mills Oakley within the Brisbane context, certainly Queensland, it's a lot of real estate finance, project finance. We can obviously see the mining and resources boom and the gas and energy boom that we've always been accustomed to in Queensland. And then tinker that with obviously the financing component for those projects and for those larger projects. And that's really the expertise that we as lawyers within the mid-market space, as well as the institutional space or the top tier firms would practice in. And that's really lending to the likes of Rio Tinto, BHP, as well as Queensland Rail for their rolling stock, even the likes of Brookfield and larger players in the market who own the assets in North Queensland or near Rockhampton and Mackay. But also to that, there's, to bring it back to a different level, there's the corporate mid-market space, and that is the SME lending to businesses. within Queensland as well. And then we have the third cog is essentially the retail market, which is where all the mums and dads and all the general population lend or borrow money into. So we traditionally, again, back in the 90s and the noughties, we've had the four major banks, ANZ, Commonwealth Bank, Westpac and NAB. And they've been the traditional lenders within the market and are still extremely relevant and have a quite a large sense of market penetration and market grasp. What we've had of recent, probably over the last 10 years, it's come of relevance is non-bank lenders. So where new banking institutions or funds, whether they have an ADI, Australian deposit taking, as a deposit taking institution or not, they've come to a prominence because of the appetite of the four major banks has decreased in market. So a lot of the banks are seeing that there's far more risk within the Australian market, and like we see on some ads or even some discourse on Facebook that, you know, the big banks aren't lending anymore. What do we do? Where do we turn to? It's essentially this class of non-bank lending, which essentially is a lot of high net worth individuals getting together and forming funds and forming larger funds where they can then lend on to smaller participants within the market. That includes a lot of small businesses or SMEs of the like. And I might throw over to Amanda just to talk about the regulatory advice on AFSL and ACL and APRA and ACCC, and, you know, potentially where it's essentially where these funds do have some regulatory requirements out of the four major banks, which, as we all know, post Royal Commission on banks, that you know, they have not been adhering to their regulatory requirements and compliance requirements as the governing bodies would require. But certainly the non-banks and the non-bank lending arm in the market certainly do adhere to and must adhere to their regulatory requirements in the AFSL and ACL as well.
Thanks, Chris. So in terms of regulatory advice, what we assist a lot with is actually fund setup as well. So what that is essentially when people pool their money together and you know, they want to create a fund, they need to have the requisite licenses for that. So that includes, as I mentioned earlier, the Australian Financial Services License, Australian Credit License, and that's what you need to essentially deal with people's money. With non-bank setups, that's the biggest piece from the regulatory standpoint. We also provide advice in terms of dealings with APRA, which is the regulatory body for any financial services you know, entity. So with that, that leads on as well to neobanks. And what we are currently assisting is the setup of a neobank here in Australia. And that involves something called an ADI license. That's an authorized deposit taking license, essentially, institution license. And that ties in with the AFSL, ACL. It's quite complex regulatory wise. And that's where you essentially need to fully understand the legislation and where you're going in. It ties in the nuances of transactions as well, because obviously you have to have a full understanding of what it is that the bank is trying to achieve commercially with neobanks. It also involves digital law. So where that comes from is the privacy standpoint. So a lot of banks nowadays, in fact, it's not just banks, almost every industry is covered by privacy law. It's playing a large part, especially in the transformation of a lot of banks to the digital world. And that's something that we're assisting our clients with as well, that moving forward from the previous, I guess, that previous regime into this new technology-focused landscape. So that's kind of a brief on regulatory advice and digital law. And with fintechs, we don't just work with banks, we work with providers to banks. So I'm just gonna quickly move on really quickly. So this is what a fintech is essentially. It's the future of financial services. Fintechs provide services to banks and to customers. So they're B2B, which is business to business, and B2C, which is business to a customer or client. Most of the landscape is B2B currently, means they service more of the businesses. They service banks, they service, like IKEA or Harvey Norman in providing fintech services. Our clients are a mixture of both neobanks and fintechs. And we essentially fit in with startups across like the entire spectrum. This is because we're able to assist in, funding arrangements as well, because we have the connections throughout. We have clients who are in the private equity world who want to invest in things. We have clients in the fintech world. We can act as the connectors in that space. We're able to assist in company formation all the way through to scaling, which is when they start going global. And that's, I guess, the sweet spot that most of the time firms want to get into, because right before they go big, that's when you want to help them grow. And that's where the expertise comes in. So from a commercial standpoint, Chris brings his knowledge from CBA. So he has worked in the industry. It's not just pure legal knowledge. And something you'll find when you go into practice is that clients prefer somebody like a lawyer who knows what it's like to be in their shoes. And that's why experience in-house or, having a commercial mindset, everyone talks about it, but what it really is being able to be practical and thinking on your feet and trying to find the best outcome for your client. I think the worst thing is to be a no lawyer. You always want to find a way to help the client achieve what they want to achieve within the realms of the law. But yeah, do you have anything to add?
Yeah, and I'm thinking, well, to really put that contrast between old style banking finance and neobanks, as Amanda was saying, it really comes at the end of the day on data rights, the ability of what you're willing to give up as people of your data or your, things that like your date of birth or your age or your preferences in terms of clothing and the labels that you buy and purchase. And, you'll see in a lot of your banking apps, your segregation into different types of spending on, is it, eating out or hospitality or your mortgage or, some other category. And it's really banks tracking your movement as well as, we've seen this on Facebook and Facebook into a bit of trouble on it as well. But really big corporates or big digital looking at your data, looking at your behaviours and then trying to predict what your next behaviour is. And really that's all that a lot of digital law is born out of, is privacy and data. And then it's what you do with that data. What do banks do with that data? What does Facebook do with that data to then attract more advertising for the spaces that you go onto, or to try and attract some commercial benefit of you spending money at a certain store or a certain or within a certain app. So really, there's been that much of change, so much change that banks and neobanks are looking at the granular detail of human behaviour at the end of the day. And that's been a major change within neobanks. And, certainly we've seen in Australia, there's been 4 or 5 neobanks that have really come to prominence, and we've had one that's failed, and that's Zinger Bank. If people may have come across, their little pink cards, and they've paid an amazing amount on their deposits at 2.5%, when all the other banks were around 1.2%. In terms of payment of interest on your deposits with them. So it's really, the change of the landscape is really, as I said, far more granular. and really looking at what neobanks bring to old banking. And only a few weeks ago, we've had NAB take over 18,600. I think it's 18,600. And that's essentially the company's name, or the number of seconds in the day, essentially. And they're a smaller neobank that a larger bank has seen, hey, we need this technology within our bank. We're more than happy to acquire and take on your expertise and skills to then drive what we need internally to understand our clients and our client base and the products that we could offer as a bank, as well as other institutions like Woolworths or Coles, to then provide data onto them of your spending habits and behaviours when you shop, if it's at Thursday night shopping or Saturday, or if you don't actually step into the store itself, you're just buying and purchasing off an app. So really understanding your movements and behaviours at that granular level. As Amanda was saying, when you're looking at startups, and we've all seen Shark Tank, and how ideas come to the forefront, and how we move in terms of business circles and funding for those business circles. So I don't know if Amanda has anything to...
Yeah, I was also just going to add to Chris's point earlier about the landscape changing. So it's not just changing from like the perspective of providers and banks, but also from a regulatory standpoint. So I don't know if you've come across the consumer data right, but from a regulatory landscape, the government is now pushing for access to data for consumers. So under the consumer data right, clients and customers are now able to control their data and allow access to different entities, whether they're fintechs, whether they're different banks. It increases the competition within the banking and finance landscape, and it also gives the power back to consumers. So there's a real change in appetite, I think, here in the industry. It's definitely sparked a lot of interest in the fintech world, because part of the reason for the consumer data right, or CDR, and open banking is because they wanted to increase competition and assist, I guess, the fintech industry in its development and growth. And off the back of what Chris was saying as well, with Westpac partnering with neobanks, Westpac is the example I wanted to give. Westpac is now working with Afterpay. And that's a really interesting one, because Afterpay isn't a neobank. They're a buy now, pay later scheme entity. And it's interesting because Westpac is actually utilizing Afterpay's platform and Afterpay's services, their data, their clients to, I guess, back up what Westpac is doing, and eventually they're going to release a new product. This is something that we're seeing a lot in market, where banks are also partnering with other fintechs to release new products. They're going to do joint ventures. In fact, one of our clients is working on something like this as well. It's something that we're really seeing in the industry. And I think it's going to revolutionize the way banking and finance is going to be in the future, whether it's from a legal perspective, whether it's from a client customer perspective. It's definitely increasing competition, which is a good thing for consumers. It's also, going to, I think, change the way that the regulation is going to be. And about funding and scaling up, one of the biggest difficulties that I think companies will find in this scheme of things is actually fundraising. And that's because finding somebody to, I guess, back you up and believe in your idea enough is a difficult thing. There are different, types of ways of raising money. So you could go into debt raising, or equity fundraising. You could also, crowdfunding, bootstrapping. So bootstrapping is when you essentially put in your sweat, tears, and money into creating your dream. But the thing is that once you pass that fundraising stage, it gets a lot easier and we're able to assist. And I think this is what people coming into the market, new lawyers need to realize. There has to be like an add value. And this is something Chris has taught me as well, that, we're not just lawyers. We're there as their advisors, we're assisting them. There's more that we can do. It's not just saying, this is what you can do within the ambit of the law. It's like, this is who we can connect you with, even if it's not from the funding perspective. If we can connect you to somebody else who can assist you in developing your product. It's all about the network at the end of the day, because who you refer your client to could also end up becoming your client. It's like a web, essentially. But yeah.
Yeah, and then, we might, apart from presenting on banking and finance and neobanks, I think it's probably, far more relevant just to, as we said, as in our introductions of where we've come and what we've been doing, and, yourselves as law students of where you want to go and what you're thinking of practicing in the future. So I might spend maybe 5 or 10 minutes on that, and that might be actually far more beneficial than telling everyone out there what we do and how we do it, which is I'm sure is really interesting. But certainly, from my very embryonic stage within the law, I was essentially graduating towards an IPIT degree within the legal context, so communication law. And if you think about back in my day in the 90s, it was all about Y2K. So what happened when the year 2000 came along and your VHS recorder or your digital watch couldn't function because it never went up to year 2000. And, everyone laughs at this and they go, oh my gosh, Chris, how old are you? But this was a real concern. And at the time I was actually working in Coca-Cola. And like all major organizations, if you've got anything tech related, and that's everyone, it's from the processing plants of making your Coke bottles, that's from the timing of how cold your fridges and freezers are. So this affected everyone globally. So my big idea was back then, I was going to be this IT guru and fix the Y2K problem as a junior paralegal in Coca-Cola, which has been around for at least 40, 50 years in its current form. So my understanding of the law and grasp was, okay, let's do something current and valid, and I'll grow into a job like that. Essentially what Amanda and I are presenting, or Amanda, on digital law and neotech and where things are progressing, and as law students, what type of law you'd like to do, whether that's commercial litigation, family law, finance, property construction, whatever you're thinking purely within private practice or in law, how do you maintain your relevance in the market that you're about to go into? And out of all the students that are putting their hands up for the small places in law firms, how do you differentiate yourself as well? That's not to say that the majority of law students don't go into law firms at all. And I think out of my 120 students of my year, there's probably 2 of us that have made it, or that have had that longevity to stay within private practice. And whether or not you go into an in-house role or you go into a finance role or you work at a bank, there's a lot of iterations that you come through within your career and people that you meet and influence you. So, starting out as a IPIT lawyer, I hated maths at school, and I promised myself I would never do maths again. And 20, down tracks 6 years, 7 years later, I'm in banking and finance. So, I would say always keep an open mind into what you, the people and the influence of your managers and leaders as well, of what you find interesting, and you may, do an absolute pivot or, a left turn and go into something absolutely different, or that might be relevant and interesting in market that you never really thought of or even read at uni or elsewhere. So really keep an open mind into what you're, what you could be doing or what you could be achieving. And I don't know, Amanda's experience, or I guess, coming out of Silicon Valley as well, you're probably thinking Google or Facebook and, climb the VP ladder and, forget about law. It's far more interesting and fun. So I don't know what you relate to the students out there.
So
To head of digital law practice in the Brisbane office, so to speak.
My track was interesting because I come from an Asian household. My mother gave me 3 choices: doctor, lawyer, engineer, nothing else. And I wanted to actually work in tech. I wanted to, be a dev. I wanted to do something in that field. Yes, you're right, Chris. I had high goals. I wanted to, be president in Google. Maybe, I don't know. I felt like I was quite limited on that front because my family wasn't very supportive with me going into tech. My mom wanted a more traditional route, but I didn't. That involved a lot of headbutting. But that aside, I found a way to combine what I wanted to do with what my mother wanted me to do. And in the end, I found that I actually enjoy it. I do love the law. I love being able to merge banking and finance law, which I like, with tech law, and bringing that commercial aspects to it. Having actually done stints at Google and Facebook, that carries a different level of understanding with a lot of our tech clients, even with our banking clients, because with this whole new movement across, it's difficult to find somebody at the intersection of technology and law, banking and technology and law, and that's the unfair advantage. So that's startup lingo for what will be the thing that pushes you across the edge. You need to have an unfair advantage, and you need to push that unfair advantage. You need to make it grow. And in this standpoint, I'm super lucky to have Chris to assist me and, encourage me to pursue what I do want to pursue, whilst at the same time supporting me. I think it's something that's quite rare. And this is I guess, life advice. You need to find a team that's willing to support you and help you grow as well, with the things that you want to do. So neobanking, and I think digital law, wasn't something that was super relevant here in Brisbane, especially. But I wanted to do that, and Chris has always supported me in doing that. And I think that's super important. When you're going out there and you're trying to get a job, you need to make sure that it's a fit both ways as well. So yeah, that's kind of the story as to how I ended up there. It was my mother.
They are great influences.
Yeah.
And adding to that, there's a lot of information out there on Facebook, on LinkedIn. Mark Boris is there, Gary V is there internationally. Back in my day, it was Tony Robbins, but you had to pay $500 to see him. Now it's all, there's everything accessible for yourselves, and there's always so much of information overload, and you've really got to nut down what you enjoy. And it is a hybrid of what you enjoy, or what your perception of your enjoyment is, and can you find a team or a manager or a leader? And there's obviously a distinction that we know about those two, but somebody that helps you in what you enjoy and what you want to do. And as a leader and as a manager, you've got to play both of those roles within any organisation to really encourage and to really get buy-in of students, graduates, summer clerks. You need to understand what they want to do as well. There's gone are the old days where it's working for someone, it's working with now. It's like you're a team, you band together, you're trying to stay relevant in market. You want a job at the end of the day. You want money to pay your mortgage and your car and your kids, school fees, etc. So, really comes down to a fundamental of you're going to students of yourself. I'm going to gravitate towards a lecturer that I really love and it's really, geeing me up, and I love I may not love the, what's written on the pieces of paper in the books, but they make it interesting. And from that, you get a lot of, I certainly from university days, you have a lot of buy into, your lecturers, and they do influencing. Then you go into the real world, and the real world, you land a job, and you're like, well, Jesus is all new again. Who are the people that really connect or resonate, or who want to back me and to push my own agenda as well and guide? I think that's really it. It's, I've studied at law. I've done either 3-year law degree or a 5-year double degree, however long it is. You've got the main skill sets now of being able to cram for 2 or 3 hours before an exam and then come out going, wow. But, these are the fundamental skills that you do really need, and what university really sets you up for in the real world within law, because it is high pressure. It is differentiate yourself from the other thousands of students that come into the market at any one time. So, with that in mind, really latch on to people that are willing to back you. And it might come from left field place that you haven't even thought about, or you never really wanted to go in there, like banking and finance. I don't know if there's anything else I can add.
Should we open for questions?
Yeah, I don't know if there's anyone. Sorry, we haven't checked the Zoom if there are any questions coming in. I don't know if Maddie can quickly jump around. But certainly if you've, we've got quite a bit of...
Essentially who we work with, just a quick overview with logos. But that's essentially, sorry,
Yeah.
thanks. This is who we work with at the moment, and it's always growing, it's always evolving. This is just a bit of a glimpse as to who it is.
So,
Yep.
you can really see we, act for international banks and Chinese banks, certainly the Aussie banks as well, EFT, Sure and RDC on the digital side, as well as funds and non-banks in Queensland Capital, Archery Capital and Tier 1 Capital. So really coming out into private practice, there's a myriad of clients that you can work with. You're not just stuck within one part of the law or within one client. There's a huge world out there, as we all know. Maddie, was there any questions? Jason, sorry. There we go. The tech hand. Over to you.
Thank you so much, guys, for making yourselves available today. I thought I'd just ask 2 questions. I've tried to think of 2 questions that people that might be watching this later on. So there's a lot of students that couldn't make it today. So the first one I thought of asking around the GDPR, because we've recently studied that over summer. And I thought, I don't want to ask a specific question, but maybe if you'd like to further talk about whether this is obviously becoming more relevant in this space, and go from there.
Sure. So I'll field this one. That's very exciting. I'm so glad to hear that you guys are learning about GDPR. I think I heard about it from Maddie as well.
Yeah.
So GDPR, if you aren't aware, is essentially the privacy regime in Europe. And it's starting to make its way to in Australia with the privacy law reforms that are currently happening. So we have things like CDR that I briefly raised earlier. It's going to be transitioning across to all the other industries as well, not just banking. It's going to be in electricity and telecommunications. Eventually, it's going to be everywhere. With the Privacy Act, they basically are starting to revamp it. They're trying to make it look more like GDPR. So GDPR is a lot more onerous in terms of what their requirements are. It's pretty strict in terms of their definitions of privacy, their definitions of data. An interesting piece that would be relevant to you guys is shadow profiling. So that's very, very interesting because essentially when you Google things, even when you aren't logged in, for example, Google creates a profile of you. So each time you search something up, they'll connect it to your IP address, your cookies, and they'll say, this person looked for baby wipes. This person looked for cookies. I'm going to imagine that this person, I'm going to guess this person's a parent of some sort. And they've been like, they're now able to use that information and sell it. They've created an AI service to actually help you bid for places on the Google webpage. And because they have these profiles of you, even if you aren't logged in, so even though you haven't agreed to any of their terms and conditions, by virtue of you using their site, they're able to do these things with your data. GDPR regulates that to some extent, a lot better than the Australian regime currently does. And what Australia is trying to work towards is something that is a GDPR standard. It's ever evolving privacy. The definition of data changes all the time because, new things will come up. Things need to change. There isn't even a definition of AI at the moment. No one can actually explain what it is. So with that, I think the law, everyone says this, but it's actually true. It's always playing catch up with technology and privacy and digital law, especially. It's really 10, 20 steps behind. It's how Afterpay came into fruition. It's, all these fast movers, they're the ones that are shaping the law. So with GDPR, that's currently where we stand. If you want to have a look at the privacy reform, they've come out with like a letter that they've addressed some questions to. Anyone can put input into that and write. That's pretty interesting. A good resource is on like everything digital law, the intersection between technology and law, and also, is led by some super powerful and amazing females, one of whom we work with as well, Joni. And it's an amazing initiative. It's very cool. Students are invited to join and also write submissions for things like this. So it's a good way to be introduced to private practice or the actual regulatory landscape. So yeah, that's a brief on GDPR. I hope I answered your question. Do you want me to go into a little bit more detail?
Oh no, that's perfect. I just thought speaking about it would be pretty relevant because we've all just spent a few weeks trying to get our head around the actual act itself, or the regulation.
It's a painful one. It's a painful one.
So my question to all the students and putting Amanda on the spot, have the European legislators got it right? Are we adapting a law that is right and relevant, I presume globally now that it's coming into Australia and it's part of Europe? Is it a matter of let's wait and see exactly what our legislation or our legislators do to either adopt certain parts or not adopt certain parts? We're in an ever-changing global digital world. Are we being protected as consumers or as digital participants? So
I've got a very lawyery answer for that. It's hard to respond to that because there are definitely some aspects that are great about GDPR. It affords amazing protection in some respects, but coming from it from the standpoint of our clients being the fintechs, our clients being the corporations, there are a lot of hoops to jump through to get through there. The barrier to entry now is a lot higher. You have to make sure that you meet all these requirements, and it's costly. Even when, you might just be accessing just the tiniest bit of data that is anonymized. It's hard to balance. And that's the thing, it's a delicate balancing act between regulation and it being practical. So the answer in short to your question, Chris, is it's just going to keep evolving. It's moving. No one can say if it's right or wrong. It's right for now. Whether it'll be right in the future or whether, it's going to take a completely different form, it's up for debate. It's up to the market, I think. We're currently seeing a lot of pushback from Facebook, for example. in terms of the legislative changes with the new media code. That's a big piece. That's really interesting as well because, you know, they're really fighting very hard. Google caved in. And yet Facebook is really trying to push back. All the other countries might, you know, are watching this and seeing what sort of precedents this sets. I think it's definitely something that is going to be ever evolving, and the market will decide to some extent what form the regulation will take, because, you know, if it becomes too difficult for companies to comply, no one's going to comply anyway. The government is going to have to fine basically everyone. It doesn't make for a good move, I don't think, at the end of the day. So a lot of it is, you know, subject to change in the future. But yeah.
And I presume the consumer has the ability to opt in.
Oh, definitely.
And really, at the end of the day, that's probably the main, you know, the main outtake of it is you can only set up the framework and the structure so far as it can law catch up to market practice and market standards. But as the consumer or as the individual, you know, you have the ability to opt in or opt out.
It's about education as well, because a lot of consumers don't even know they can opt out.
Yeah. And it's, you know, it's like any other banking product. If you like that product, or if you think that company or corporate or bank is responsible enough with your data and your information, of course you'll opt in and, you know, obtain the service and obtain the benefits from the service. But then also know that there are times where, you know, simple, you know, cybersecurity hackers, you know, cybersecurity is lacking, hackers can get in. You know, we've seen large organisations like Optus or Telstra or, you know, the major telecommunications companies, you know, fall foul of security breaches. So I think as consumers, whilst we know that, you know, we can opt in and we can obtain the services, there's always going to be an element of, you know, something could go wrong. And I think in a practical sense, that's what we've got to really recognise, you know, to adapt and to obtain, you know, the benefits of that service being provided.
I think so. And I think it's really interesting because ever since consumer data right and open banking has been rolled out, no one actually knows about it. No consumers are aware that they have this control over their information. Unless you're in the field itself, no one's actually advertising it. The government has created these really onerous obligations and, you know, put a lot on companies, fintechs, banks. But at the same time, is anyone actually reaping the benefits of it? At the moment, it's kind of up in the air. Everyone's scrambling to comply. But what are, like, you know, they're complying because the regulation's making it. No one's actually reaping any practical benefits from it. So it's very much an education piece.
Again, like with any larger body of law, I always think about AUSTRAC and anti-money laundering. And it's just not an obligation of a bank understanding where its customers obtain funds or money. You know, you're going back 10 or 12 different layers to actually find out where the money really originated. And, you know, you can only do so much in terms of the administration legs on how far you go that the legislation requires you to go. So it's like any new body of legislation as it comes through, it's being adaptive to the current market. Can they make it foreseeable of what's going to happen or what could potentially happen in the future? You know, they certainly make those allowances, but you know, when it comes down to the practicality, like AML and CTF or counterterrorism financing legislation, it's how far does the government go to make it workable in market? So I think this is the greatest challenge of CDR, that whenever we lend from Europe or from the States or from other countries, how far do we go for the context of Australia? And again, for consumers in the context of Australia in the wider global market. So, you know, I think any new or any evolving a new piece of legislation, there's always going to be, you know, a lot of working. And I think obviously my question was very loaded to Amanda in trying to get some definitive place of where this legislation could come out, which is, you know, again, the beauty of being a lawyer, and
Play in the gray.
you're playing the grey, and you've got essentially a job for life, because there's always conjecture and negotiation and understanding of an evolving beast, which is trying to assist communities and the market. Hey, we get it wrong sometimes. In general, we're trying to make it an easier service developed
Yeah, I think
marketplace.
so. Yep. Cool.
So, Jason, was there another question? I think you had one.
Oh,
That was CDR.
Yeah, thank you so much. Only if there's time. If you guys have to wrap things up, I totally understand.
Yeah, no, we're good.
Yeah.
Yeah.
I'm
We
quite
can
new to
take
this.
the last question if you'd like.
Yeah.
Thank you so much. I'm quite new to this aspect of law because I've got no experience in banking and finance. But so I just thought I'd just ask questions. The next question around fund setup. Does that involve floating IPO stocks for these fintech companies?
They can.
Yeah,
Yeah,
I just wasn't sure.
well,
It wasn't mentioned, so I thought I'd just ask because it's something that I am interested in down the track. But I wasn't sure. Again, I haven't studied it and I don't practice in this area. So
Yeah, I guess to answer that kind of succinctly, there are many funding solutions that companies, whether they're startup or they're an established company, can go to an IPO on the ASX or Hong Kong Stock Exchange or NASDAQ or wherever it is that they choose to globally. Participants, say mums and dads buying into a larger company or private equity funds, like PIMCO,
Yep.
CVC, who control hundreds of millions of dollars of investor money, as well as our superannuation funds like CBUS, Q Super. They also have to invest in money or invest in assets to get returns to the end consumer that has they're super tied up for 20, 25 years and can't see it, but know that there's some accumulation of wealth. So we've got these larger funds or larger houses of money needing to do something to grow. Otherwise, you never join a building society, or you reinvest from super into a different fund or fund of funds. So really, when you're looking at companies and corporates trying to grow, trying to get accumulate or acquire new businesses or entities, they'll go into market and they'll either raise equity and they'll raise debt. So if we think and I always say the easiest concepts is your own. So your mortgage, you go into a bank and you need a minimum of 20%, otherwise you pay LMI insurance for the bank's benefit, and the bank will lend you the 80%, so long as you've got a job and you can pay back that over 25 years or 30 years, however long. There are certain cash flows there that are supporting that debt or that repayment. Same in business, whether it's SME or corporate or institutional, the same types of formula works at all those levels. So if we think of just mums and dads, if you want to purchase a business, well then the collateral or the security that you give to the bank for the purchase of the business could be your house, could be a second mortgage over your house, which is second ranking to another institution that you're lending from in the first place. But you have funds that are supported by a debt instrument or a security for the purchase of that new business or that new acquisition. So you need a certain type or level of amount of equity as well as debt. And when we come into larger corporates, to answer Jason's initial question, is when you're IPOing, well, the reason why a company IPOs is so it can tap into a different type of financial product or financial market, the equities market, to then raise that greater amount of equity. Then it can go to a bank or a financial institution and raise greater amounts of debt for other acquisitions. For, if we bring it back to mums and dads, to purchase another investment house or a investment unit. So I hope, Jason, that kind of answers it in a
Yeah,
in
it
some
does.
shape or form.
It's very
Probably not
difficult
a pretty
to, oh, no.
explanation. But
No, it's definitely great. Again, I don't want to be asking specific questions. I just thought I'd mention the topic, and again, I appreciate you taking the time to explain this space of the law, because I don't have any point of reference, to be honest. Besides, I've only worked in bankruptcy for the federal government, so it's more of an accounting background. So yeah, I just thought, again, thank you so much for explaining it.
yeah, no, fantastic. And again, if anyone has questions or queries, please email through to the Law Society, and they'll track through to us on our emails, or you can probably even look us up on our website and send us an email if you'd like, and we can explain things, or maybe give a bit of guidance. If there are questions that you have as a first year or a fifth year undergraduate looking to come into the market and the big wide world of law and private practice, or even other companies, or what you might be interested in out there.
Yeah.
So I think we're near time, and we won't stop talking. But thanks for your attendance today and your participation, and thanks to the Law Society for having us as well.
Yep. Thank you.
Yeah, great. And we'll sign off. Have a lovely week.
Thanks, everyone.
Thanks, everyone.
Thanks, guys.
Thank you, everyone.